Planes, trains, and automobiles, not just an 80s movie, but 3 ways to make some cash. Brian, you have 3 stocks in breakout right now that you want to hit on right here that are performing really well. First, planes. BE Aerospace makes plane cabin interiors, reported a killer third quarter, raised revenue guidance for 2011, and bullish numbers for 2012. Stock is up about 15% for the last 2 months, though. Has it run too much?
I don't think so. I think there's still plenty of runway here. What you have is a couple things. First of all, airlines are adding capacity because for the first time management noted that people in Asia and the Middle East are really, the middle class is gaining income, kind of like what happened in the 60s in the US. And all of a sudden you can see this explosion of air traffic. So those airlines in particular are adding lots of capacity. And what we also have is a shift to wide-body aircraft. And in a wide-body plane, BE Aerospace makes $6 to $9, basically the dollar content available that they could have in a smaller plane. So there's a lot of opportunity, one plane, but a lot more content. And
could possibly the emerging market growth offset any weakness we're seeing in the Western countries?
I think so, but truth is we're not really seeing lots of weakness right now, even in Western countries. I mean, airline load factors are at highs.
All right, let's go to trains. We have Kansas City Southern operates rail freight transportation services in U.S., Mexico, and Panama. One of the big growth drivers is Mexico, though. Does the geopolitical risk there offer a risk for the stock?
I think it's something they have to be mindful of. But right now, the Mexican market is so attractive to many companies that are looking to move production from China to North America. It's something called nearshoring, and the reason that they're doing that is because the labor rates in China are only about 15% cheaper than that in Mexico. And with shipping costs, it's much more attractive to be producing locally.
All right, so let's go to automobiles. We have Gentex, which basically makes mirrors for cars, right? And posted better than expected third quarter results, and will growth, though, really continue at this fast pace that we have been seeing?
So I think that first of all, what you're seeing is that auto sales are reviving. They've come back from the dead. Maybe they're not super robust, but they're healthy, and that's good for their business. Also, what's really interesting is that by the end of this year, we're going to hear back, there's some pending legislation that can mandate that there are rear camera displays in each rear view mirror that will be required on all cars by September 2014. Now, in auto-dimming mirrors, Gentex holds a majority market share. If they could address a majority market share and 80% of the market, there's a lot of earnings leverage that this company can see, and I think numbers can go much, much higher.
And last quick question, how do high oil prices affect all these 3 companies?
It's something to watch. It's a cost for many of them. But I think that, again, we're talking about strong secular growth stories and not just cyclical recoveries, and that's why these 3 stocks are particularly attractive.
All right, thanks, Brian. There you have it. Planes, trains, and automobiles, the 3 stocks that can break out.